Hi, everybody. TGIF.
Morning,
I was
Coach.
just, I was, hey, hi, Ryan. I was just kidding you, Blake. You asked Ryan if he could hear that when you texted him. How are you? It's Friday, man, you know?
What's he doing now? What's he done now?
Yeah,
he done
Alexander, how are you? Mira, Shabbat Shalom. Richard, Hugo, Sinatra, our whole crew there. Daniel, how are you? Nice to meet you. Michael Schneider. Riley James, that's a new name. Nice to meet you. Welcome to F.A.C.E.
We still see a black screens, Dale.
Oh, yeah. Okay, see. This black.
Turn the lights on.
Resume. Yeah, okay. Here's the lights. All right. So I think one of the best forecasts of the week, besides Ryan saying that, Evergrande wasn't systemic and there was a trade here, which there was. And then if you didn't buy the fundamental argument down here, Blake showed the Gartley that could take, oh, this is the NASDAQ. See, it is Friday. Showed that the S&P could rally up to this level. It went right to the 61.8 level on the Gartley. So, whether or not a short works or not, it was the projection down here. When we were trading down here, I thought maybe, back to here, back to there, but that Gartley took it all the way up there. So anyway, I tried it up there at 61.8. Oh, you bought Evergrande. Okay. I wish you much luck. So we'll see. We still have a confirmed low. Nothing unusual about a market rallying to 61.8. In fact, NASDAQ 100 missed it by a little bit. And, maybe if we could take this uptrend out, dollar's popping pretty good today. Maybe we have a 3. I think this was a mistick, ghost pip or something, but maybe it was an omen that it's going to try it. Anyway, Euro giving some back, are we going to make a new low there? I don't know if we're going to know till next week. I didn't expect the dollar to get this much back today. I don't know about you guys. Yen's still marching along. That was a chart of the day by Blake. Great look. He also has this line up here that, maybe we could go to 112.5, 113. I will say this, the key area for 10 years, even though we've gotten this rally over 140, pay attention to this 148 level. It was a big level if you look left. Okay. I think that we'll have some trouble there. If we break out there, I think we could challenge, maybe challenge the old highs. So kind of torn between, will yields continue to go up if that 61.8 retrace is a failing rally and we have another wave down? So that's a conflict on there. I didn't think Aussie would give this much back. So, on a weekly basis, dollar still looks okay. Tried to turn under yesterday's lows. There's some problems. And then gold, gold took out that right shoulder. Maybe it's still developing one. I didn't do anything about it. I kind of think that if the yen's going to 112.5, there's lower levels in gold. So we'll see. Not enough for me to want to do something on a Friday with a negative week like this. It was a negative week in gold. No reason to buy it. And of course, and maybe Blake wants to talk about it, China seems like they could make everything happen, and they're definitely making it happen in crypto, aren't they? So pretty negative week in Bitcoin and pretty negative week in Ethereum. So, I think that we could maybe trade back to these lows again in Ethereum and Bitcoin. Why can't it trade 32 grand or so? We'll be there by Tuesday. Anyway, I don't know how anyone trades it. It's just too, well, it's a chart. I guess it's just the leverage. that scares me. Just that you could lose, like, if you do a whole Bitcoin, you know, could lose 5 grand in a few seconds. So this is the last Friday of the month. Well, the EOM madness starts today. And Richard, what is EOM?
End of month.
Oh, end of month. Okay, thank you, Ryan. So
End of
Ryan,
quarter two.
yeah. Are you surprised? The cable had this kind of give back today, and the dollar had this type of pop after how it acted yesterday.
I was surprised yesterday. I thought with US yields rallying so much that the dollar was going to exert itself after the initial moves. It seemed to be a bit of a delayed reaction. I think what we got yesterday was a general market view that, you know, QE's going to be coming to an end. You know, the worst of the financial troubles, if you like, are over in terms of emergency measures. So we've seen a global uplift in yields, you know, across the Western majors, if you like. And I think that's why it's been more of a risk on move, and that's why the yen's been suffering, and that's been putting a lot of the strings. But you know, if this move keeps going in US yields particularly, then I would be expecting the dollar to show itself a bit more, and perhaps it's doing that just now as the Yanks come to town for the last day of the week.
Oh yeah, because I'll tell you, yesterday with the dollar weakness for gold to be down as much as it was,
you
know, that was you know, I was planning on trying longs, but the fact that it was caving while the dollar was weak was kind of like I guess, you know, really nothing after decades really surprises you, but it was definitely a sign of extreme weakness, even if the DSI is like 12.
Yeah, it's like an old-fashioned risk-on move, isn't it? I mean, the term risk-on has changed so many times over the years, but this is like a typical risk-on move. You know, you see the yen sold off, see the dollar sold off, and everything else rising. And I think
the market was S&Ps and Nasdaq had a great day, follow through. So anyway, again, I'm glad it's Friday.
Tell me about it. And the golf starts as well.
What's that?
And the golf starts today as well.
Oh, what golf tournament?
The
Ryder Cup.
Oh, I know.
Come on, Europe. Come on, Europe.
So
it's
you're
been
not
on
going to see
all
Stelios,
week, right?
No, it starts today.
No, it's today. USA. USA. Sorry.
There are no Greek golfers, never will be, but I'm on Europe's side.
Okay. If we didn't have women in the room, I'd have a great joke, but I won't say it. So anyway, what do you think, Stel, besides Ryder Cup and 3 putting every green? You get on in 2 and 3 putting. Do you ever get the yips when you're trading? Like you get them on the greens?
Sometimes. What do I think about the markets? Well, the markets are trying to accept that we are going to be tapering, or the Fed is, and they're going to be hiking and all that. I am not ready to accept what they are telling us, which is that tapering is going to be done by mid next year. I think that's a bit fast as a pace. I don't know if the markets are going to like that. But at the end of the day, you know, this is what they're telling us, and markets are kind of still going sideways. Okay, we're down a little bit today on the S&P, but we're down over 1% yesterday. So overall, unfortunately, it seems like nothing has changed. You know, we've been through some payrolls numbers, Fed minutes, Fed decisions and all that, and we're still at around 130, 140, 150, whatever in 10-year yields in the US, and we're still grinding sideways in the S&P. Yeah, you get the daily volatility, but overall,
yes, just a shade lower on the week. What a comeback!
Yes, and the same with currencies. You know, the euro is okay; it's 170 above 117, but it's still in the grand scheme of things. It's you know, it's just chopping around. That's what it's doing. And speaking of chopping around, the big chop is cryptos, and you mentioned them. And you know, China basically, they came out. Central bank, I think it was, who said that, they put something on the site that said that any crypto transaction is now illegal or is illegal. So the markets definitely didn't want that, and the Chinese want to crack down on mining as well, because you know, it does consume huge amounts of energy, etc., etc. So they seem to be they want to control cryptos, at least in their country.
They want to kill it. Yeah,
they want to kill it. They want to do whatever they want to do.
They want control.
governments want control. That's what they want.
Yeah.
And remember, we were talking about it even before it became so big, that Bitcoin and market cap of cryptos, that, the big problem with cryptos will be their own success. If they become too big, governments will want to take, first of all, their share of it. They want to tax it because governments tax everything. And if it becomes too powerful, and if it threatens in any way the monetary system, which I don't think it will, but if it does, well, the governments always win. They're going to just pass a law or two and control it and regulate it, and that will be that. But they are very volatile. I mean, I have a couple of friends who trade cryptos, and they've done well. But man, down 10% today in Ethereum, it's just pretty big moves. But
when you look at S&Ps and Bitcoin, I know some of the wave structure is different, but the general direction is the same, isn't it? One other thing about the taper, and you'll like this, Blake. A friend of mine saw Ray Dalio interviewed. And he believes, they're going to go ahead with the taper followed by QE. That's what he thinks is going to happen.
What?
Well, that reminds me of the last taper, attempt, right?
Yeah. So, they're going to start the taper. There'll be some kind of, problem because of it. And then they're going to go back to QE again. That's Ray Dalio.
The thing is, and I have to, I mean, like, we all know that tapering's coming. We all know now. We're all very aware. The market's very aware. And how it reacted yesterday, really, to me, how the market reacted, how we bounced back so aggressively yesterday. Now, I know we're down today, but I think the market is like, hey, we tapered one time, or when we tapered and we had the taper tantrum, that, fooled me once. Now, I think the market's going to take it in stride. That doesn't mean the market won't go down, but I don't think the reason why the market's going to go down, if it does, is going to be because of tapering.
Yeah, it's in the market.
Yeah, I think the market's like very well aware of what's happening. I think that I don't want to call it a black swan, because it's not what it is. It's just more of the reason for markets to pull back will probably be a product of just a global slowdown. And, you got, this Evergrande situation is, it's more of a, deflationary type of event, and it's just going to, China, the Chinese economy is really slowing down, and the U.S. economy is probably going to suffer as a result. I don't necessarily believe that it's going to be like, we're tapering and the market's just going to crap the bed. I think I think the Fed's done a really good job orchestrating, but also
sucking the life out of it.
Yeah, they suck the life out of volatility. That's for sure. But they've been very good at telegraphing what they're going to do. As annoying as it is. I miss the days, believe me, I miss the days of surprise interest rate cuts and hikes.
Oh, yeah. I remember them. It was on Friday after money supply.
Oh, man. I
remember
tell
that?
You, those days are the good old days, man.
Yeah. No forward guidance then.
What's that?
No forward guidance then.
No.
Got it in the face.
You'd be at Friday, and all of a sudden the market would move like, the Dow at that time would move like 200 points, and that's like the equivalent of a 1,500 point move today. Those were the good old days. Yeah,
ruined a weekend for me once.
I've had them. I've had them ruined. I've had them ruined, and I've had them made. Yeah.
I know. Life was so exciting. Thank God I was younger then to handle the duress. But anyway, So, looking at the S&Ps, Blake, what do you think? What would happen? Say the Gartley's complete. What would a harmonic trader be looking for now?
So this is what we were looking at yesterday. If you haven't seen the S&P, so if you go over to you can see what was being discussed yesterday here on the ForexAnalytix app. Here's the chart, right? And so now that and then yesterday I put up this in the daily roundup webinar that we did for the ForexAnalytix subscribers. That's the underside of the broken trend line, right? So the question Dale just asked is how far would you be expecting a move like this? Well, I think the first target would be a 38% retracement of this entire move. So let's put it on a chart that hasn't been all doctored up, so you kind of see where that's at. You're looking at maybe a move around 4,400, which we're about 25 points away from. That's not saying we can't go lower. I'm just saying that would be an initial target. Okay. So, if you're looking here, 4,400, maybe you'd look at this trend line. It's going to come in around the same spot. So yeah, we break below that, then that opens the door probably for a retest of 4,300 in the coming, week or well, I wouldn't say weeks or months. I would say probably like by next week. Remember, we're only dealing with, this is a week and a half's worth of data right here. I mean, this is.
Oh yeah, it's 4 hour. Yeah.
This is a week and a half. So you got to think if we break this trend line, we're probably heading down here going into this next week. I do think that we are in a very vulnerable spot as far as equities go. I think you got to be really, really cautious with risk on type of trades. I don't, I look at this Evergrande situation and we should probably have a discussion about it because, I think this is, and I know we talked about this a couple of days ago. This is a situation that could, feed on itself. And I don't think they're just going to fail, but it's not going to go away. And I think it's more of a product of a very slowing China economy. I mean, what are your thoughts here, Stelios and Ryan, regarding Evergrande? You have any opinions here?
Well, again, we had some news today that the Chinese authorities are going to oversee the accounts to make sure that all the building projects that they had online are going to get built. So, again, that's more smoothing. So that's likely them paying suppliers, paying contractors who potentially were going to lose out if those builds didn't happen.
But they didn't they miss a payment today? But they have 30 days to pay it. But they missed the payment today too.
They missed 83 million, and that's the risk you're taking when you're doing private equity and stuff like that.
Yeah.
Okay. Yeah. In the grand scheme of things, we know they're in trouble. We know they're going bust. It's how that bust gets managed. If the worst case is that there's some haircuts and whatever and some delayed payments, that's going to be it. But 83 million, no one's going to cause a crisis over 83 million. If it's 83 million this week, 200 million next week, 200 million the week after that, well, then you got to start asking questions. But it depends who that money's getting paid to. I go back to what we heard last week. Ashmore Group is only in the hole for 400 million exposure. BlackRock 375 million. HSBC I think it was 280 odd million. Plus they've got exposure to other parts of that sector, so they may be the ones that you're going to look at for a bit of trouble. But the amounts in terms of spillover to the Western side of things, I think is still relatively small. As you say, the psychology of it, the sentiment of it can still cause problems. We still see market moves on it, like we had this week. But I think there's, you can take the zero hedge slant on things, or you can look at it properly and dig into it and find out exactly what the issues are.
And, I don't want to take, if you guys haven't had a chance to listen to Chris Weston from Pepperstone, I did an interview with him 2 days ago, and it was really good. It was on the Trader Summit site, guys. If you haven't been here to Trader Summit, this is, and here, I'm going to put this, you guys should be here every day, because there's a great way to start your day. First and foremost, you see all these like posts, like everything from like, Mark Chandler's daily piece is on there. Giles, who I met with yesterday, he posts a lot of great stuff on there. Some really great content. I'm going to get this over to you guys. This is for everyone here. I'm going to put the link in the chat box. You should start your day by just reading that first and foremost.
How about ending your day with it?
I'm sorry.
How about before you go to bed? Read it.
Or before you go to bed. There you go. Yeah, you could do that too. But this Chris Weston interview, the reason why this one's so good is he points out so many things that we should be watching as traders regarding Evergrande. What he calls the trigger points. But I'm going to go back to something that we've been watching really carefully is over here, the US dollar CNH. Where is it? And where did it go? Why is it?
What's with China the last few years? First a virus, now a credit virus.
Look, Dale, they are, going to overtake. They will end up being the biggest economy in the world.
This helped too. Get them there with COVID and all the money we've had to spend. It has weakened us, and then we have self-inflicted wounds like Afghanistan. And now he doesn't care. Think about it, Blake. Americans will handle economic downturns a lot less resolutely than the Chinese population, which is even though they could ride, they're used to the majority of them, even though many have been lifted up, living a pretty basic life. So I think this is part of their big grand strategy to weaken the U.S.
Oh my God! I just went into a conspiracy theory.
All right. Well, I just, if you saw McMaster talking about them yesterday, he's a pretty smart guy. And,
I have look, Dale. I have my own opinions about all that.
Yeah.
And I can wholeheartedly say I do not disagree with you, but it's neither the time or place for that. I want to just show you really quick. The US dollar CNH. This is a managed currency. Obviously, it's a diamond formation, big, triangle here, or a big diamond pattern. I'm sorry, off a big trend line. Little false breakdown. If we start to see this US dollar CNH really start to break above like this 652, 653, then that the renminbi is weakening. And it is weakening substantially. And that's a lever, if you will, that China can pull to really, kind of blunt the downside of anything that comes at them, as they can just weaken their currency, and this is, so if we start to see the US dollar CNH really break out higher, that's when I think you should be looking for a little bit bigger, move lower in risk. And I think that things are starting to get a little spicy with maybe, whether it's Evergrande or maybe other systemic, risk. Yeah, that, maybe you get a little bit more, some cockroaches scurrying around, but like as Ryan said, you can pull out the zero hedge approach and be a fear monger if you want. But I think for us, really from a more pragmatic standpoint, let's just watch the US dollar CNH, especially if you're not like a person that really needs to keep up with every single headline and you're watching Twitter and then Bloomberg and you're trying to figure out exactly what's happening. You're getting to the root of the problem. Screw that. Just watch the US dollar CNH. We break above 650. Start sniffing around a little bit. We get above 652. That's when you should start really getting worried. You know what I mean? So anyway, that's something that I'm looking at personally. And then also, let's take a look at the Aussie dollar. I'm gonna say that I thought the Aussie was on its way to the upper end of this range here. Yesterday, we broke above this channel and I'm like, all right, well, and this is before last night. So let's just kind of delete that. Say, we get above this 38% retracement, and we break above that high, and we're going to be challenging the upper end of this range. But here we are today, and we've slumped right back down. And the Aussie, I have to say, once again, is trading heavy. Now, one last thing I need to talk about really quick before we turn it over to Harry over at Live Squawk. And I'm letting Ryan rest his voice, because I know he's going to have a few things to say when Harry gets here, because him and Harry go way back, right?
Yeah.
Yeah.
So
I hear a lot of drinking stories.
Yeah. So you guys are in for a real treat. I like having, just so you guys know, we have Live Squawk integrated into, ForexAnalytix. And you can get their live, their a discounted rate for their audio broadcast through us, which is awesome. But I'm going to let Ryan rest really quick. I want to go into gold, and then Stelios and I can have this conversation. I was talking to Giles yesterday, Coughlin, and you guys should. That guy is probably one of the nicer people you're going to meet.
He is a great guy.
He's super, super nice guy. And if you've been watching him on Forex Live for a while, he's a contributor over there. Just a super friendly person. But I was having a discussion with him yesterday regarding gold off camera, if you will. And I'm like, man, I've been interviewing a lot of people recently, for Traders Summit, and you
like it, don't you?
Well, I've always interviewed people over the years, over the last 15 years. We'd bring in at least 2 people a month, for the morning edge. But doing it as frequently as this, doing like 3 or 4 interviews a day is a little tiring. We've kind of had a stacked schedule this month. And I've ended up talking to a lot of people. But one thing that's universal, Dale, is everybody's bullish gold.
Yeah. It's intelligence gathering for yourself and your listeners. You see that now?
It is.
Don't you get some ideas that if you weren't conducting these interviews and talking to these people, you may not have thought of?
Yeah. Well, that's the same that we have with our chat room. Like I get a lot of my trade ideas from the chat room, because it's like every eyeball on the market versus my 2 eyeballs. So that's the great thing about being in a community. But the thing about gold is gold has been one of the things I've realized over the last several months is it's just underperforming. And so many people are bullish gold, and I get the reasons why. And, Giles and I were talking about this, and he goes, yeah, it's like we, you get the reasoning why, but what happens if let's just say, this inflation, these inflationary pressures really subside, then you just kick the leg out from the 3-legged stool. You just kick out one of the legs, and what happens to gold? And so, then we're going to be testing these support levels once again. I can't figure out why. And this is going back to yesterday. I saw the move in yields. Obviously, we had a big break higher in yields, right? Yeah. Which is still maintaining today. Dollar didn't respond. So this is like a post FOMC move. Yields moved, gold moved, dollar didn't move. Which was really kind of a confusing thing that happened in the market. But I have to say, dollar looks, poised to break higher. And if it does, that could be the catalyst that drives gold back down towards this, 1680 level. I think it's something that we have to be very, very keenly aware of, because gold and silver have really been underperforming here. And now you got, one of the things is you got cryptos under pressure, which isn't even helping gold and silver right now. So I don't know.
That's true. Yeah.
Yeah. So I don't know if some
a lot
wacky
of
moves
disjointed markets right now.
In the short term, it looks heavy in the short term. Even for me, who I'm a big bull, it looks heavy and it doesn't look good in the short term. So
it doesn't. But you go out to the daily chart, and then you just you pan out a couple years, And you have to realize that gold is making higher highs and higher lows. So if you look at gold on a weekly basis, I mean, the way I would view gold is something that looks like this, right? It's just, you know, you're making higher highs and you're making higher lows, and, you know, gold could get down towards, I don't think we're going to.
It's hard to say, isn't it?
Yeah, I don't think we're going to get all the way back down here, but you know, can we get back down to 1600 before another move higher? I think it's entirely possible. I don't think
we can. Yeah.
Yeah, I don't think you should rule that out. I think gold over time is going higher though, and I think that's the one constant that we have with analysis with and anybody around is looking at gold as being more constructive longer term, and but near term, as you know, Stelios just pointed out, it is trading heavy. So anyway, guys and gals, I want to thank you all for being here today. I'm pretty excited that Harry from Live Squawk is here, and I've had the opportunity to chat with him once or twice, but I'm going to turn it over to Dale and Ryan and let them take over and bring you Harry from Live Squawk. So everybody, thanks for joining in today. Happy Friday, TGIF. Make sure you visit our webinar sponsors. Make sure you visit Forest Park FX. We've been partnered with them for the last 5 or so years, and they're like the concierge brokerage firms. They really are. If you want to say, hey, I'm a day trader and I'm trying to find out what the best brokerage firm is going to be for me, and I live in Europe, they're going to, work with you and figure out, who's got the tighter spreads, who's got, the better commission structure based on what you do. There's no one that does what they do.
Yeah. If your current broker can't see the forest from the trees, call Forest Park and it'll be a picnic.
There you go.
It'll be a picnic.
All right, guys. So, hey, enjoy the weekend. Be careful, be safe, watch your risk, with any exposure you have. Keep your size manageable, because these are the times where things look a little risky. Hey, look, we could have a complete 100% bailout, a triple R cut by China over the weekend, and stocks will be at all-time highs come Monday morning. So don't think it's just downside risk. All right. So anyway, all right,
Blake.
See you guys.
Blake, have a great weekend, buddy. Great job this week for you and the team.
Thanks. Same to you.
Ryan's going to be here to talk to Harry. Harry, welcome to F.A.C.E.
Thank you.
Pleasure to meet you. Look at that beautiful family. Were you gonna share your screen at all, Harry? You have anything to show?
Well,
or you just want to talk?
I just want to talk. There's nothing really to show for me. I mean, it's just
okay.
I actually, you know what? I can.
You could put your mug on.
You put my mug.
Don't scare the kids.
What I'll try and do is, I'll try and get up the website, because it's better than my face, and I'll show you, what we do and how we work.
Okay, so thank you very much, Harry. It's a green button, share screen. And Ryan is with us today. There's a little history in the business with Ryan, right?
Yeah.
Yeah. I mean, in terms of, we go back to school days. I mean, I don't remember him because he's a bit younger. He's a bit younger.
Considerably younger.
He doesn't look it, but he is considerably younger than I am.
All right. And we're off. All right.
I've only just begun.
Harry, why don't you tell us about kind of your journey in the industry, and how you ended up putting together Live Squawk. I remember the little speakers that we would have on our desks, and the analysts would come on every morning, and that was our squawk box type of thing at brokerage houses. And then CNBC had their morning show and called it Squawk Box, and the later versions were sometimes people in a pit. You would hear the S&P pit, the bid offers, the trades. Tell us what you're doing and how you came to develop this product.
Well, just a bit of history about me. I started in the industry back in '88, which is why I'm considered a bit older than Ryan.
Are you sharing your screen, Harry? Otherwise
I tried, and it wasn't working.
Green button.
I'll try again. I've got the green button. It's just I'm trying to find the page I need.
Maybe I could do it. I'll pull
livesport.com.
up your website, Harry.
Thank you very much.
Okay, so you want to tell us about it?
Yeah, sorry. So yeah, I basically started in the industry back in '88. I worked for a German bank on their settlements division. So I started in the old school, from the back office, middle office, through to the front desk, really,
Okay.
Which is how you used to serve your apprenticeship and get going. Went down to the futures exchange, life market, back in '89, '90, and really did my time there at the German bank. I then went to Cargill, CIS futures, and basically built my knowledge base from there as a broker, initially a futures broker, and moved on to, I guess I went to the CME and CBOT in the mid 90s for a year. So I love Chicago, cold or not, I love it. And then really developed again my broking skills. Ran a desk at the age of about 25, 26 back in London at Thales in Tokyo, and then traded for myself. I think in the early 2000s, late 90s when the floor finished. Ended up as a prop trader for a little while, and then basically I finished the prop trading side of the business about 2004, 2005. Realized there was a bit of a hole in the market for information.
Yes.
You know, unless you had a lot of money to start with, having a Bloomberg or Reuters and everything else was prohibitive, really, in terms of you trying to make money on a monthly basis. So you had to get what you could get from where you could get it, and you're very much more on a flow trader, you know, looking at price action and everything else, which is still a good skill to have, as well as the technicals. And from there, I set this business up. It was a case of, you know, I think I know enough about what's happening. I can find stuff out as a broker. You have to be resourceful. We have to, you know, you call upon friends and contacts to give you information and better cover. And I utilized all that in starting the business. So
you also have to be careful what comes across it, right? I mean, you have to deal with compliance issues from regulators. Certain things are no-nos as far as coming across the squawk.
Yeah, I mean, you listen, rumors and all those whisper numbers you have to be very careful of. I mean, you want to corroborate everything you can. There's no point putting out information that just basically is wrong or just steers people in the wrong direction. We're there.
Do you have to stay market neutral, Harry, during your broadcast?
Yeah, we're agnostic. I don't care if the market goes up, down, left, or right. We don't trade.
Okay.
We don't have positions or anything like that. So
okay. So that's another thing regulators look for, right? You know, if you're making recommendations or have a bias or things like that. So what are the features, and then I'm going to bring Ryan in, the features that most traders really value in your service that helps them? What do you think the main reason is for the attractiveness of your service? I mean, it's not just because it's too quiet in their home office and they just need to hear something. So where's the value for traders? What part of the squawk do you think they really pay attention to?
I think the distillation of news, well, all of it, hopefully, but distillation. Yeah. You know, we're not there to repeat stuff. We have to pick out the important headlines, the important pieces of news, the important market action. And
so you're also like a curator for people during the day. You're curating the news. Okay.
Yeah, a filter. You know, we're there to, you know, everyone can look at the news if they want and have this, again, it's prosperity for some, but for us, it's just about our experience over the years. As I've been doing this now for quite a long time. And putting that to use as editor-in-chief here means that we guide our audiences to what we believe and what is important to their trading day. You know, market moving events, and also, so again, most importantly, market moving events. We're there to make sure that you don't miss a headline if it moves the price, moves your prices around, but also as a kind of guide as to what's coming out for the day ahead. It's a preparation tool as well, you know, to make sure you're not blindsided by anything that comes out as best as we can. I mean, listen, our claim is we don't make you money. We help you not to lose money. So by not being blindsided,
okay,
yeah, we're not, you know, you make the money,
Yeah.
you're the trader. That's your job. Our job is to try and make sure you're not blindsided by, especially scheduled news. If there's a scheduled event, we'll make sure you're aware of it, the importance of it, and when it is, and then also bring you that news as it comes out, as it hits the wires.
is your coverage 24/6? What's your coverage?
Well, effectively, so we start Sunday evening. That start of the Asia session. We're based in London, and we all work through till Friday evening, end of the US session, US futures session, equity futures session. So that's us pretty much most of the week. And obviously with cryptos, we'll keep an eye on stuff over the weekend and post stuff if we see something interesting.
Do you love what you do?
You have to. It's simple.
Exactly.
You know,
right.
if I couldn't listen, trading is as a career is a brilliant one if you can get it right. Second to that, providing the information that makes other people money is up there. You know, getting the news first. When I was starting out, you know, being quick to the news was my USP, if you like, and I was on a trading floor at the time, and therefore there was a direct feedback to what I put out there from traders, and you know what traders are like, especially old school. They're your fiercest critics, but you're you know, your best friends if you get it right for them. They won't share your profit, but share the profit. But you know, that feedback.
Yeah, very creative idea to do this in the internet age when it used to come over like I don't know, telephone line or something. You remember those little speakers, Harry? Were you around?
Yeah, I used to do that as well. Yeah. I used to be on the box, just quoting prices. I just sit at the front of the booth ahead of my traders, and I'd be feeding information back to the desks upstairs.
Nice.
So that is how this. You know, that was my sort of apprenticeship into this, really.
Okay, well, I'm going to bring your childhood friend into this now, Ryan. All right, you know, what a great thing to have a reunion here on F.A.C.E, you guys. So why don't you guys, you know, before we get to the markets, tell us about where you guys first met, and did you have a fight on the playground?
Well, I'd have kicked him up all over the playground if I had.
Oh, here we go. Gloves are off. The funny thing was we met through. I think it was actually when I sort of started at Forex Live.
Yeah, I think it was.
Okay.
Yeah, and I can't remember how we got in touch. We got in touch, and you know, because we were interested in the service that they offered, and just talking to Harry, we realised, you know, we pretty much followed the same sort of career path. You know, we went to the same school. You know, as stated, Harry was many years ahead of me in age, and
We're talking two.
so we found out we went to the same pubs and done pretty much followed. We've both support the same team, fortunately, and we followed the same path. Yeah, I don't know about that.
No, definitely not.
I have to ask the wife about that. We. You know, I went through the metals. I was on the LME. I started my career same way in the back office, moving through to the front office, down onto the live floor. I vaguely remember having on the live floor, but not to speak to. And so yeah, and you know, we got into a business relationship to do with Forex Live, and obviously that's carried on to a fairly good friendship now.
What do you like most about having Squawk on during the trading day, Ryan?
It's twofold. It's getting the news and getting the news fast. You know, if you can be sitting there looking at a chart and ping, you'll hear something in your ear, and you know, it's not. I'm not being dismissive to Harry or the service, but you know, 99% of news is irrelevant. But it's that one headline that you hear that makes a difference. So you can listen to thousands of headlines all day long, read thousands of headlines all day long. It's just the one you need. And, you know, me and Harry, we're sort of trained because we're on the floor and we've been traders and been in the pits. You develop a sense, a hearing sense, if you like, where you can filter out subconsciously the crap you don't want to hear and pick up the stuff you do want to hear. And that's the same with Live Squawk. You know, I couldn't tell you the last 10 headlines, but I'll tell you the big ones that come out. I'll tell you about the China one where the government are saying they're going to, you know, step in and take over the books of Evergrande. I'll hear that one and ping. That gives me a chance to move. You know, it's like, Dale, you would get information overload these days, and you learn, and traders should learn how to filter out the crap from what's important, and that's where a squawk is important. Yeah,
it's essential. What I'd say is to that is that the way I train my guys is intonation in your voice is everything. You know, we have 3 levels of importance, really. The mundane, everyday stuff that is just that comes out on a cyclical basis anyway. You'll have the semi-important stuff that basically maybe frames a current topic or a current situation, and then there's that number 1 red alert setting, whereby you have to listen to what I have to say, because by listening to what I have to say, it impacts on what you do. And that's the thing. And as I said, we're not a radio station, so we're not constantly speaking. But yes, we do. You know, for different markets, for different traders, for different customers, there are different headlines that matter. But there, you know, it's really important that when we say something important, we get that across to our audience, and that comes from confidence and knowledge in the markets, knowledge in what we're trying to convey and the subject matter. So that's you know, that's when it matters.
I know you're probably going to say there's no competition, but because of what you do, you have no competition because you're the best at what you do. Is it saturated?
Saturated. It's interesting because I remember when I started this, you couldn't convince anyone to take the service because back in the day, we've got news, we've got this, all the screens we need, we know what we're doing. It was only when 2008 came that we really saw a demand for our service, and I mean ours as an industry, not just mine. There were 3 or 4 services at the time. It's probably about 5 or 6 now. Some in foreign languages that we're starting to see, which I think is a great thing. So saturation, no, I think there's still a lot of people out there unaware of what we do and the benefit we bring as an industry to traders.
It's really interesting. It's interesting you bring up 2008 when we're in a crisis and markets aren't just going one way. You know, the passive investor genius that just buys spiders and he's a genius because the tide is lifting all boats. It seems that when things aren't just in one direction, people look for guidance. Have you noticed that in your career?
Yeah.
During times of turbulence, they find out they're not a genius.
Absolutely. You know, in 2008, for me, it was one of the most enlightening times. I've been in the markets. I've been there late 80s. I've seen some of the things that happened. I was there for the sterling falling out, the F.A.C.E and everything else that was going on back in the day. So for me, 2008 was an eye-opener. And for some traders, and if you remember slightly before that period, it was a very benign environment for markets. There wasn't a lot going on. We had earnings out maybe, or there'd be a ratings upgrade, downgrade that moved the markets. But in between that, there was very little going through. 2008 flipped that on its head. Every minute nearly, at the height of that crisis, there was something happening, a bank going under, a central bank cutting interest rates, just all these things that were happening. And it was like bullets out the dark. And if you hadn't had a service like the Squawk, you quite easily could have been run over, or even more severely run over if you were in the game at the time. And I know it made a lot of people a lot of money back then, but I think we also, more importantly, saved a lot of people from disastrous events, I should say, at the time.
Okay.
So
since you're out there seeking the news, do you have a harder time getting news out of Asia, especially China, because of their opaqueness? You only get what they let you have, right?
Exactly. I mean, we were looking to a few years back. We talked to Shenzhen authorities and this and the other to try and see if we could open up in China and get the service into there and be based or base a unit over there. And it was, yeah, of course you can, absolutely, as long as you put out what we tell you to put out. And I said, well, it's not really how we work. We just put out the truth. We're not, it's not tinged by our views. It doesn't matter what we think. It's just news, and it just never happened for that reason. It may happen.
There's one thing you got to remember with Chinese news as well, is that there's always two versions. There's the version they give to their population and the version they put out to us lot in the West.
Right.
And quite often they don't align. It's one thing I learned a few years ago. Yeah, it's one thing I learned a few years ago. Because people think what they're telling us is what's happening in China, where it probably the complete opposite.
Okay. Well, Harry, I want to thank you for coming in on a Friday after a long week. I have your website up here for where people could contact you, and they could follow you on Twitter at Live Squawk. And it's great to go to sleep at night knowing you provide a service to help people reach your goal and add value. So I could tell you're content with the business model and what you're doing in your life. And you know what? That's worth a lot of money. In fact,
absolutely,
you can't buy being content with what you do for a living. I've talked about how much fun we have here in F.A.C.E. We're providing actionable stuff, but we also have a great time and laugh with each other. So it was great to meet you.
No, it's a great pleasure. Thank you, Dale.
Yeah, and
I've known about you for years in the industry, so it's good to talk.
Oh, okay. Well, have a great weekend, Harry, and guys. I think there's something we already have some type of partnership with you, or we're working on one.
Sure.
So check out Harry, and if you're a news junkie, looks like a great source. And that's a wrap for the week. Ryan, thank you for laying it out on the court all week, and you're a great addition to the team. And thank you everyone for hanging out with us. We hope we add value to what you're trying to accomplish. And just like Harry, our mission is to build up and edify you every day. So,
and as always, a big thank you to you, Dale, for leading the charge as you do all through the week.
I appreciate that, Ryan. So everyone, remember, don't just count your pips, count your blessings. Good luck the rest of the day. And also, Fridays are a great day to subscribe. You have the whole weekend, and that includes Harry too. Whole weekend to learn to navigate a new thing. Okay, so that's a wrap. Everyone have a great weekend, and we'll be here in Force Monday. Adios, and thank you again, Harry.
Thank you very much.
Cheers, guys.
See you, Ryan.
Bye.